Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Theta. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch it before watching this one so that you have more context. It's going to be linked in the top right-hand corner of your screen right now. Also, I have two donation links down below in the description. If you want to support Ukraine, feel free to do so by going over to the official website. Thank you all for supporting the channel. Let's get on with the video. So jumping into Theta, this is the daily chart on TradingView. If I zoom out, you can see that I have a large Fibonacci retracement set up. I'm going to highlight the swing high, which is over here. We printed that in April of last year. And we have the swing low over here that we printed in June of this year. So as you can see, we have been in this falling wedge for quite some time. Then we lost it in May, and we haven't really seen the back test of resistance. And that's what I was expecting here in August, for us to come all the way up to the previous support of the pattern and then get rejected down from there. That didn't end up happening. So yeah, nothing's going to play out the way you expected, obviously, in the crypto markets. But if I start zooming in a bit here, you can see that I have a second Fibonacci retracement, which is slightly smaller. And the swing low here is over here. As you can see, I used the exact same low in June of 2022, and the swing high is over here that we printed in August. And as you can see, we are retracing back to the 0.236, and we are creating some sort of a double bottom pattern here. Now, if we lose the first low, obviously the pattern is invalidated, but if I just zoom in a little bit over here, you can see that we have a nice first low here and a nice second low. And this is a very nice double bottom pattern. If you want to see what the potential target out of that is going to be, then what you can do is you can take a trend line, drag it all the way down, and then place it at the neckline here. So that would give us a target of around about $1.31. To be conservative, we're just going to say that it's going to be the 0.5 here of this smaller Fibonacci retracement. Now, this is only if we start breaking the neckline here, which is the 0.382. That aligns with the neckline of the pattern, obviously. So if that ends up happening, we're going to be targeting $1.28 to 0.5. But for that, obviously, we need to break the neckline. And if we start losing this low that we printed at the beginning of September, the pattern is invalidated. So if this low goes lower than this one, the pattern is no longer valid. So just keep that in mind. That is regarding this, a pretty bullish pattern that I found potentially, right? We have to start coming up from here. We don't want to go any lower. Below us, we have another support level, which is 95 or 96 cents. And this is the low that we printed back in June of this year. So this is something that I don't want to lose, obviously, because if we see ourselves go below this, you're going to have more targets to the downside, because once you start losing key support levels, that is very negative. So if I drop in this Fib retracement, as you can see, your minimal target after losing the 96 point here would be at 81.5 cents, which is the 1.272. And then you have the 1.618 at 66.5 cents. Now, obviously, if we did get to those prices, those would be great opportunities to buy into Theta. And I would imagine Bitcoin at that point would be somewhere at $16,000, $17,000, $15,000, which we don't know if it's going to happen, if we're going to see those prices for BTC, but anything is possible. Like I said, no one thought that BTC would go below $20,000, and yet we are below $20,000 right now. So that's regarding the daily chart. Obviously, you do have this buy zone, this yellow zone, actually, or golden zone, however you want to call it. So anywhere from $2.54 all the way down to $1.47.5. This is a great buying opportunity, in my opinion. But as you can see, we have gone below this. We back tested it as resistance, and we came below it once again. Now, this buy zone is here because in 2021, in January, we printed a high at $2.54. Then we dumped all the way down to $1.47, and from there we had to move to the upside. We went above the previous resistance here, and from there we haven't looked back really going into the bull market of 2021. But the trading range here from this low to this high, right? This is why I have this buy zone set up over here, because you have some people trying to sell here, you have some people trying to buy here, and right now this is a potential resistance area for us because we've retested the zone once as resistance. The next time we come into it, hopefully we'll be able to go up, and I do think we're going to start hitting $2.54 on our way to the upside. But when when we get there, we'll talk about that. Now is all about holding key support areas. Like I mentioned, 96 cents is a very important level for us to hold. Below that, you have another key support area at 77 cents, because this is where we got rejected in October of 2020. So we had this high over here, we printed this high, as you can see, and then we came back down lower into these prices over here in November. And from there, we started going up, and we haven't really back tested this 76 cents area. So what I'm thinking is, if we see a capitulation, we could dump all the way down to this price here, maybe get a wick a little bit down below that to liquidate some positions, and then we can see a move to the upside into 2023 and 2024, whenever we're going to have our next bull market. So that's what I think. Moving into the daily RSI here, as you can see, we do have this symmetrical triangle on the charts, and as you can see, we are potentially going to run into this support trend line that we've held once before in May, once here in August, once here in September, and potentially we're looking for another test in September. Failing that, I would target the buy zone here, the green buy zone, anywhere from 34.8 to 26.8, because every time we have been in that zone, we saw a strong move to the upside, except a couple of times where we did drop below it. But after that, we had a very, very strong move to the upside as well. And usually if you drop below it, the move to the upside is typically even stronger. So as you can see, this is usually where you need to be buying into Theta, because after this, even if you're looking for a mid to short term trade, it's very smart to buy in here, because you can wait for a little retracement to the upside, and then you can sell at some point and take the profit and just go home, right? You don't have to buy in long term. But if you're buying in long term, then I would advise just dollar cost averaging through these dips, for example, such as the one that we are experiencing right now. So this is a great dip to dollar cost average in at. And the symmetrical triangle, at some point, if we start losing this support, that's quite negative, because we're going to be losing the pattern and the support of the pattern. And if we start coming back up, we might run into this level as resistance. So just know that previous support levels are going to become resistances once you lose them. So that would provide you with great swing trading opportunities. But if we continue on and bounce from here and go up and down and get closer to the apex, potentially we could see a break to the upside moving into November, which would be a very, very good swing trading opportunity, because as you know, each November getting closer to November, we see strong uptrends in the crypto market. Now let's go and switch over to the Binance website real quick. So moving over into the daily chart on Binance, you can see that I do have some sort of a buy zone here, as you can see, or not really a buy zone, but this is a trading range that we have been in ever since May. So as you can see, from $1.47.5 all the way down to $1.08, we have been bouncing up and down in between these levels. And usually once you get down to the bottom of the trading range, that would be a great entry point. So right now we do potentially have a great entry point. If anything, you could wait until you bounce off of the support of the falling wedge that we're in right now. We did see a little fake out from the falling wedge and a potential break to the upside. That didn't happen. So let's see if we can hold the support of this falling wedge, this white descending trend line. Also, I would look at the target here at $1.27, I would say is the target from this pattern, because that's where the pattern was created. So that really aligns with the daily 55 EMA. So if we see any sort of a relief rally, that would be a great entry point in my opinion. So look out for that. And let's switch over to the weekly chart real quick and see what's going on over there. So I would say the 20 EMA on the weekly chart is a great exit point if you want to take some profits or you want to enter for a short to mid-term trade. If we see some sort of a move into November, that could be something that we would reject on the weekly chart. Also, the weekly 55 EMA is something that we need to keep an eye on as well. From where we are right now, that would be a nice 160% trade. But like I said, no guarantees here on the crypto market. You have to be ready for both outcomes. If we take a look at the RSI, we are in a very good position to continue dollar cost averaging here. As you can see, we are in this sideways channel. Actually, I do think we are technically, this is a falling wedge, because if I do just this to move this trend line a little bit, this would be a falling wedge because you're getting tighter and tighter closer to the apex of the pattern. So this is not really a channel, but a falling wedge. And if we take a look at the weekly stochastic, we are on our way to the oversold. So if you want your confirmation of the downtrend and you want to know that you're pretty much bottomed out for in midterm sense, right? Because the stochastic is really for midterm trading, then wait for us to get oversold on the stochastic below the index of 20. But like I said, based on the price action right now, this is a very good entry point, because this is as low as you've been since May, right? Because in May you had a dump all the way down to $1.05, and in June you had a dump below at $1. So you have to be, smart about these things, because you could obviously dump down to 76 cents. But if you have been buying Theta here at $6 to $10, then dollar cost averaging at these lower prices is a very, very smart thing, especially if you're bullish on the project, if you're waiting for higher prices. For example, if you're waiting for Theta to be anywhere at, $50. But let's see what actually our targets would be here, considering that this is our bottom of the bear market. So let's assume that this is our bottom of the bear market, and let's slap on a Fibonacci retracement. So we would be looking at a $90 Theta, and this would be the top of the next bull market, in my opinion. Based on this Fibonacci retracement, obviously we could go higher, but that would be a nice 8,000% trade. So from where we are right now, that's an 8,000%. And we would only be targeting that if we broke through the first fib level, which is at $16 here. So yeah, this is something that you could be looking at, $90 per token, and you could start entering from as low as $1 here. So yeah, think about it. Thank you all for watching. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter, and feel free to join me on Patreon as well. I'm going to catch you in the next one. Goodbye, and